All right, let's get right into it. Today, we're not just looking at a stock chart, we're performing an emergency diagnosis. Think of this as a case study, right out of a financial ER, where we're going to examine a patient in critical condition and see if we can figure out its chances of survival. So, meet our patient, Yayai RWA Incorporated. As of October 29th, its pulse, its closing price, was a mere $2.37. That's our starting point.
Now, $2.37, on its own, that number doesn't tell us the whole story. So the real question is, how sick is this patient? Just how far did it fall to get here?
And wow, this is where the scale of the collapse becomes just shockingly clear. Get this, within the past year, this same exact stock was trading at over $316. We're not talking about a dip here. This is a complete and utter catastrophic plunge.
So you might want to scrub in. We are putting this stock squarely in the ER to run a full workup. We're going to check its vitals, search for any signs of life, and try to determine what it would even take to have a shot at recovery.
All right, first things first. Just like in any ER, you've got to check the vitals, assess the most obvious symptoms. In the world of technical analysis, that means checking the trend. Which direction is this patient heading, and more importantly, how fast?
For our first diagnostic tool, we're using something called the Arun indicator. Now, the easiest way to think about this is like it's a specialized scanner. One that tells us with pretty high certainty if the patient's condition is getting better or worse, and just how severe it is.
And the results from the scanner are in. The Arun down indicator is at 100. That's the maximum possible reading. This is a crystal clear diagnosis. The patient is in a powerful, confirmed downtrend. There's really no question about the direction of this illness. Okay, next up, we're hooking up the ADX, which stands for the Average Directional Index. So if the Arun told us the direction the illness is headed, think of the ADX as the heartbeat monitor. It tells us the strength of that illness, the raw underlying power of its momentum.
Now, what's crucial here is that while the high ADX number confirms a strong trend, it's the numbers inside that tell the real story. The downward pressure is more than double the upward pressure. So the diagnosis is totally consistent. A severe and powerful downtrend is in complete control here.
So, okay, the initial vitals, they look pretty grim. There's just no denying that. But in any real emergency, you don't stop there, right? You've got to look closer. Search for any tiny, subtle signs of life that others might have missed.
So is this a flat line, or is there maybe a faint heartbeat hidden somewhere beneath all the noise of this massive sell-off? Let's dig in and see if we can find any conflicting signals.
And this is where things get really interesting. On the one hand, yeah, the bad news is just overwhelming. But on the other, there's a tiny glimmer of hope. See, the selling volume is actually decreasing, which might suggest the sellers are running out of steam. Then you have a positive MACD histogram hinting that the downward momentum could be weakening, and the stock is what we call deeply oversold, which can sometimes make a bounce more likely.
Okay, so we found a faint pulse. The patient isn't dead yet. So now, like any good doctor, we need to define the path to recovery. What are the key milestones this patient has to hit just to stabilize, let alone get any better?
The analysts have zeroed in on 3 specific price points that are going to act as battle lines. These numbers are pretty much going to determine if the stock stabilizes or if it just keeps on crashing. So let's break them down.
First up, and this one is absolutely crucial, is $2.19. This is the key support level. Just think of it as the floor. If the price breaks below this, the patient has basically fallen out of bed and the condition could get much, much worse. It has to hold this line. Next is 248. This is the pivot point. It's the center line, the point of balance. Reclaiming this level would be the very first sign that the patient is finally stabilizing, that it's no longer in a free fall. It's the first step towards just sitting up. And finally, 265. This is the first major resistance level. It's the ceiling. Breaking through this would signal that the patient isn't just stable anymore, but is actively starting to recover. This is the equivalent of taking those first steps out of the ICU. So, with these 3 critical levels in mind, we can now map out 2 very different potential futures for our patient. You can think of them as 2 possible treatment plans. One leads to recovery, and the other, well, not so much.
Here's the best-case scenario, the road to recovery. First, the stock has to hold that support at 219. Then, it needs to gather enough strength to reclaim the pivot point at 248.
If it can do that, the next big goal is to break through resistance at 265. If that sequence plays out, you could see a powerful rebound, as buyers might rush in to take advantage of these deeply oversold conditions.
But, of course, there's the other, darker path. If the stock can't even get back to that pivot point, the bears stay in control. The real danger is a break below support at 219. If that floor gives way, it will almost certainly retest its all-time lows, and that severe downtrend we diagnosed earlier will continue with force.
So we've run the tests, we've laid out the scenarios. The patient is stable, but still critical. And now we enter the final watch, where every single small movement matters.
As one analyst put it, the extreme volatility tells us we're at a critical juncture. And that's exactly right. This isn't just another trading day. This is a moment that could define this stock's future for months or maybe even years.
So let's summarize. Why AI is critically ill, but those faint signs of life, like the drop in selling volume, you can't ignore them. Everything now really comes down to the battle between that floor at 219 and that ceiling at 265. What we're witnessing is a stock teetering on a knife's edge.
And that leaves us with the ultimate question. After a collapse of this magnitude, are we watching the final moments of a total breakdown? Or could we be seeing the very first signs of a breakthrough? The next few moves will tell the whole story.